What's up, everyone? Welcome to Saturday's. This is Saturday's market review. This is for the Lazarus members. Very quick announcement. I get to work on the new strategy course today. So all throughout today, this evening, I'm going to be literally extremely busy. Setting up the course, strategy course, and then we're gonna have I'll be giving out rewards for the person who makes the most progress off the course. So let's see how that plays out. But first off, let's do a very lengthy review. I know I was basically not with you guys on Thursday and Friday. So on Thursday and Friday, I was not available for a market breakdown. So this is gonna be a video covering maps is from Thursday going into Friday. Um, so basically, the currencies we're going to be focusing on today would be DXY, gold, and USD CAD. So I would not touch in euro dollar and UPS dollar because I have a bias going to next week. So I want to save that for tomorrow. So that tomorrow I can do a breakdown plus a forecast. So I'll save the analysis in GU and EU fiber and cable for tomorrow. But for now, we're going to do DXY, gold, and USD CAD, especially USD CAD because again, I had a trade on Thursday afternoon after my flight. It was something I was really looking forward to. So I was looking forward to the potential of that happening. And as soon as I saw that, I'm like, let's go. And it was just so smooth. So yeah. First up on the DXY, first I wanted to point out just a rehash from on Wednesday. So I mentioned on Wednesday that I wanted to see expansion on the upside. I think we literally participated in this move on the years ago, especially. So I mentioned Wednesday I want to say expansion to on the upside, and I was looking for price to reach, the weekly high. And what you can see in the weekly high is we have this, which is a weekly sell side imbalance price setting efficiency. So we have a weekly CB here, and that is the level of premium. Now remember, whenever you're looking at the weekly range, whenever we get to a level of premium where institutions can offset distribution, this is where we look to take a step back on our buys. So we don't just go, we're still bullish and keep trying to go long on the XY because now we are at the level of premium where we could see potential retracement because now we could see offset distribution from the standpoint of the banks. Now, again, not to really do a forecast because that I want to save that for tomorrow. We don't necessarily need to see price come all the way down to this level because again, that's going to be classic support resistance theory. We just want to see price at least trade down. This could be an institutional flange drill. We'll keep going higher into Monday, so we're going to see about that tomorrow when I go into a deeper discussion on this. But when you get into a level like this is where you're going to begin to anticipate some form of potential either consolidation or retracement. So you're going to have this down for your notebooks. Okay, whenever we get to a level of a higher time frame discount premium, if we're coming from a discount level, you take a step back in your trend following premise, and because you could have a potential market reversal on your end or a price consolidation where the market has to take a breather before making the next move. So that is the situation on the XY. So the level we traded up into was that weekly CB. This is the discount low of the weekly CB, which is 94.428, approximately 94.3. And you can see the previous day's high, which is a Wednesday, traded exactly into that. Okay, traded does not get more precise than this. Trades up into that, wicks it as the high of the day, and then sold off. Okay, so that was why I was I was almost skipping, just looking at the accuracy because it's beautiful to watch. Anyways, yeah. Then into the next day we have a consolidation and then price trades up. Now the question is, when you see something like this, what does that scream to you as institutional trader? You have a very protracted move. Okay, it's when price has done something like this, retail is looking to get into this move. When price is here, retail is not participating in this move. Okay, when prices does something like this, retail is looking to be a part of this move. Now, when we have a long protracted move like this and a small consolidation and then a break above, what is this retail? Especially when we're not at an higher time frame primary. This is classic bull flag. That's a bull flag pattern, right? It's a bull flag pattern. Now, why would this be a false market maker retail trap? Well, that be a false market maker retail trap. Well, think logically. Number one, what day of the week is it? It's Mondays, it's Tuesdays, or Wednesdays, it's Thursdays, or Friday. It's Thursday. What could be the potential profile? It could be Thursday reversal, New York reversal profile. Where are we trading at right now? We're trading at an higher time frame Puma rate, which is the weekly sell side imbalance by side efficiency. So this should scream false flag to you. So this is literally a false flag, a false bullish flag. So it's a false flag setup. Now, why was I looking for something like this as a trade confirmation for my trade on DXY? If, yeah, let's say if I was on the session with you guys, this is what would have been trading on Thursday. If I was trading on the session with you guys, would have been selling short on DXY. With this as the shallow entry drill, stick out the lows. Excuse me. So why was I looking for something like that? Because on USD CAD, I'll go out to the monthly time frame on USD CAD. So you can see on USD CAD we have a monthly sell side imbalance, buy side efficiency from this low to this high. 3 months ago, we turned up into a breaker block on the monthly time frame. So the last down candle prior to the run above the side is a breaker block. So we turned into a breaker block. The low of this breaker block pulled away, and then the previous month we traded up into this as an institutional olive entry draw, a monthly CB. That is that monthly CB here. You can see literally that was the week that started all of this downtrend lower. Okay, so what we had was we saw price straight down into a buy side imbalance, sell side efficiency. We traded down into the consequent return of that, and that was what I was framing. Under that, I sent out USD CAD long setup. I was framing this as a bullish setup, and I was framing this bearish shadow block as a target. Because I was really unsure if we're going to take out the side because we already did that. We already took out the side here and then we pulled away. Anyways, now this is that daily bearish shadow block open. We go out to the 1 hour time frame, and you can see on the 1 hour time frame we have a short term swing guy, and then we have 1, 2, 3. All of them there. It's a 3 hour bullish bearish shadow block. 1, 2, 3 bearish shadow block, and inside of that we have a fair value gap. It's a bearish fair value gap. From this low to this high, that is the premium of this range. Okay, we're trading into the premium of the range. Now, what I want you guys to actually watch, which was automatically was what I was anticipating when I was trading this. So if you remember, I traded this for a bullish setup, and I tried to take a range here, but then we got stopped down, then price eventually traded up into that. What I was watching out for was the fact that we have very clean loose there. And my thought process was going into the next day, I want to see price start to trade down and this acts as a support. If that acts as a support, especially with DXY being at a premium level, I'll go in and look for sells, especially if I get confirmations. So now if we go down to the 15-minute time frame, that is that 1 hour bearish auto block with the gap. We completely closed on the gap and then we trade into the low end of the bearish auto block. We trade into the low end of the bearish value gap. We trade up into that low end of the bearish value gap, and then we start to sell off. Now we start to sell off, and we're coming very close to this previous high. Now, what do you think retail is doing, seeing prices stuff like this? They're looking to go long, right? They see something like this. It's a ODI, which is resistance, broken becomes support. They want to buy this as a support zone. Now, from the previous day going into New York session, we have a lower high on US CAD, At the same time, the XY was running out its previous day's high. You can see we have a higher high on the XY at a level of premium in context of a Thursday New York reversal, with DXY being the more bearish candidate in context of a potential Thursday New York reversal. So you have multiple confirmation of this as a Thursday New York reversal setup. Now, what would confirm to you the bearishness, excluding the fact that we're very close at this level, excluding the fact that we trade up into a daily premium. Again, this is that daily bearish block open that we trade exactly into, which is where I took my short off of. What is this screaming to you as a trader? Smart money reversal, low risk buy, the accumulation, smart money reversal. What is this? Potential low risk sell. You have a market maker buy model going into a sell model for Thursday. So let's find this out so you guys can see. We have the smart money reversal, we have the low risk buy, we have the reaccumulation, we have the reversal, we have the potential low risk sell. So you would have been anticipating this as a potential low risk sell. Now, in the market maker model, what is the most ideal point of buying? The low risk buy, okay, or sometimes it can be a part of the reaccumulation. Same thing here. The best area to sell, obviously not this smart money reversal. That's very difficult to find. But this would be the best for sell. The resell, the accumulation before pricing trades higher. Okay, that was the model I was looking for to frame the setup. Now it all makes sense, right? Makes sense. So inside of this, you're not looking for discount rates to buy alpha. Okay, because now we're trading to a premium. If you wanted to be bullish, you'd have seen price keep trading through that. But now the time of the week plus the context of the marketplace would have been your indication that we were possibly bearish. Now, what I simply did was, uh, what what could be my uh, model of execution for going into New York session? I was watching this 1 hour bearish order block. That's all of this. Matter of fact, this is a 1 hour bearish order block. We trade up into that. So this is a propulsion block. So you can use this as a 1 hour bearish order block. You can use this candle as a propulsion block. With the rule being, we don't want to see price go through the mean threshold of a propulsion candle. So let me just remove this. We have the SM2 divergence confirmation. Go down to the 15-minute time frame. You can see we trade up into only 15-minute time frame. This is one up candle. Those are all bearish candles as a 15-minute bearish order block. And what I did was I was shorting inside of that price range with my stops just above this because I was utilizing that as a propulsion candle, and I wanted to see price trade below this low and this, with the context being sell side liquidity. So I was not looking for an efficiency, just like I did on the buys. You know, when we're taking buys, we're looking for an efficiency for price trade up into. On the reversal, I was looking for a low sweep taken. I was looking for sell side liquidity. So anyone who's going long here is gonna place yourselves here. You're gonna place yourselves here, and I wanted to be counterparty to liquidity, and that's why I was taking short inside this range, looking for a run below this low and this low. Now the question is, why do I have this extended out? Because if you go on the 1 hour time frame, okay, even though we took this, that could have been a scalp for a short. That could be a scalp if we're looking to go short. Would have been a good area because we have a bullish fair value gap. You can see we trade on one pass, leave a smaller gap. Now we trade down into that and then we balance that out. So once we leave that level, it is a balanced price range. I'll explain myself again. The moment we're trading this down here, we have a bullish fair value gap. The moment this candle trades down and closes in the gap, we now have a balanced price range. Okay, so we could look at this for sensitivity in the future. Now we trade through the balanced price range, with the context being we're in the bearish market maker sell model, with this being lower sell and a possible reaccumulation around the right side of the curve. As we started to the upside, this can be a level of resistance because that is now natural resistance for price. Remember, balanced price ranges your natural resistance for price. Now, think if we get up into this, isn't that classic support resistance theory? Is that not going to give retail a chance of getting on this? I want to go short. Watch out, we're never getting to that old low. We never get up into that old low. We're closing on this 15-minute CB, the 15-minute CB closing on that with the balanced price range, and then we sell short. So this is 3rd of September, 17:15, going into 18:30. 17:15 going into 18:30. I intentionally looked at that because I wanted to show you again that same theory. 17:15 going to 18:30, we have lower highs on DXY and USD CAD. We have higher highs. That is divergence, folks. What would you have done if you were taking this as a sell and you were unsure? You'd have taken a short here, and then you could have put your stop loss above the other block. Because if we trade up into other block, most likely we're going to take out the short amount. That would have been your trade setup, okay? With your TP1 possibly being closing in this volume balance, and you can done something like this, or you could have placed your stop loss just above the old eye because you don't really want to see price trade up into this. This is a break block, legit, but you don't really want to see price trade up into that because that just classic support resistance theory. And that would have been your stop, and you were good to go. Because you have multiple confirmations, directional promise is confirmed. You have multiple confirmations, and that was a chance to sell off. So that was why I wanted to point this out to you guys that even if you had missed the chance to get in, excuse me, even if you had missed the chance to get in and sell there, there was always multiple opportunities for you to continue the short there, and we eventually traded down into this and then trade higher. Now, classic so retail support resistance would go if price trades up into this, you want to go short. If you sold short here, you're drawn into a deeper premium by about 29 pips. So definitely a lot of people have been stopped on this. That's why we never use classic support resistance theory. Okay, price trades almost 30 pips deeper into this old eye, and then again sells off. Now let's talk about gold. Yeah, just having a good time. Let's talk about gold. Now on the daily time frame in gold. Now I know it did not really do a lot of action except on Monday. That was the only time we did something in gold. Now after we took out that on Monday, my bias is obviously bearish because that was the last differential longs. We sold off and we traded down into the rejection block, the daily rejection block in gold. We traded down into that daily rejection block in gold. That is sell side liquidity taken out. Same way we did over here, rejection blocks. So that was the same thing we did here. Now going up into the 1 hour time frame, this zone is a 4 hour BC. You can see it's a 4 hour bullish parallel gap. Okay, you can see this is a 4 hour bullish parallel gap, and that was what I was framing longs on Monday off of. Now on Tuesday we really sold off and eliminated that level. On Monday I was using that to frame longs. On Tuesday we sold off and my bias was bearish. And then on Thursday you can see we traded up into that. It's now a bounce price because obviously it's been closed and filled, so it becomes a bounce price range. We sell off. We have a 1 hour CB. We trade up into that for institutional influential drill. The consequent encouragement of that 1 hour CB will sell off. We trade back up into that as institutional influential drill, which in the process gave us a optimal trade entry. high to low ultimate trade entry level. So sell short. Now this is that 1 hour fair value gap, and this is that 4 hour balance price range. As we trade up into this, it closes it fully, and it's now a balance price range. I remember I teach you guys about balance price ranges. Those are natural support and resistance levels. Natural support and resistance levels. Balance price range. So we trade up into this. Once you see price trade through, you automatically switch your bias to bullish. Okay. If we want to remain bearish, we should, and this is where I teach you guys change in state of delivery. So go on and watch the previous video I did on change in state of delivery that emphasizes this to understand when we change our state of delivery price. I explained this. I think I used your dollar example and how I was able to anticipate your dollar example for intraday premise. So go and rewatch that video if you want more understanding of this, and then you can use the things I discussed in that video to practice on this. But this is a change instead of delivery right here. That is a change instead of delivery. Now we trade down into this, and then we continue going bullish. This is institutional outflow entry drill down to balance pricing. But this is not ultimate trade entry, right? Right? Not ultimate trade entry. Low to high, back down. Does not really get to 618, understandable, but that is optimal trade entry. Anything below the 50% is an optimal trade entry, so that is a good area to buy. If I was in front of the charts again, if I was looking at gold, because I was in front of the charts on my phone, but I was focused on USD CAD. Again, you can see the accuracy of this. Just here. If I was in front of my chart, and I would have gone bought here without wanting to see this close in. So easy. Anyways. So squint this out. On the 5 minute time frame, you can see ultimate challenge is more cleaner. We have 1 hour balance price range here. We have a 15 minute CBC. We have a 4 hour balance price range here. We're at the discount of that 4 hour balance price range. Consequences, once we see price trade away from that, we're looking at other blocks to buy. I've taught you guys that strategy. Buying the bull shadow block after an institutional flame drill, one of my best patterns ever. Best. Okay, the best setups ever. So you could have bought as price trades down into this candle, the opening of this candle, you buy it right there, and then your stop goes below this. You don't want to see this close, so your stop is going to go down into that to get yourself protected. And literally, you're doing lots of numbers off of this. Doing massive, massive numbers off of this. Okay? Massive, massive numbers off of this. Because we have changes of delivery. So hopefully this is not too advanced for you guys. But that is the VS from this week's session. So tonight I'm going to get into the strategy training video. It's going to be a 10-day type series. And from next week, I'm going to make it available to all of you guys. But it's going to be locked. So that way no one can share the video. You can only watch it. And so you can only watch it once. You're not going to get everything fully. So that way protect the intellectual copyright. So with that being said, you guys all enjoy your afternoon. And I'll speak with you all later tomorrow. Be safe.